If you tell a kid we might have ice cream, they hear we're going to have ice cream and they expect it. And if you later say, well, we're not going to have ice cream, and I said maybe, that's actually going to lead to a much bigger crash in dopamine. Now, adults are like this too. If we think something might happen and it doesn't happen, there's a big crash in our affect, in our emotionality. In language terms, maybe means maybe, but in neurobiological terms, maybe means perhaps there's going to be the surprise of an even bigger dopamine reward. And the one thing dopamine loves more than anything else is surprise.
Hello everyone, welcome back to my channel. In this video, I will implementing the price action technical analysis, and I will do a 3 trades during this video, and I will explain you while the candlestick is running. So let's start with the market analysis. EMA was flat, all of the EMA, that's mean a doji. Okay, so you just create a doji. Where is the doji? You have a wicks, you have a opening. Okay, this is most probably good. A doji. Okay, so what happened in the middle? It's most probably a down. And you have this inverted bullish hammer. No, this should be trade as a downtrend. Okay, based on the context that you read. So the inverted bullish hammer at the end of a trend in the doji kind of market, yes, it will be profitable. Let's see. And then after this, it's also critical because we have below 200 EMA. That is very yeah, and this was 200 EMA, so we do a call option here. Most probably we have a breakout before. Okay, here is a call option, not a put option, because the price will do a retracement here, and after that we do a put option based on the candlestick analysis. Okay, let's see. The probability here was a 60%, so you can do a call option. Okay, not very nice. Call option now. It's just a losing momentum candle. So now it's a call option. Because 20 EMA, I see that still backing up the price to going up. Okay, the second candle is a little bit, you see, I said 60%, so it's like not so sure, but that is it. Okay, this is just a 3 candlestick, right? 3 entry, right? So I have to fill only 3. So you see, the first one is nice, the second one was not so good because the candlestick was a small bearish doji, and from that I know that 200 EMA will supporting price to go up. And after this candlestick, you don't need to do anything, but it's a call option. But you see, this is some kind of significant level, so don't do, because it can be a call, small bullish, something like that. So thank you guys. You see, in this kind of instrument you have to find a good moment or a quick, but when you do a quick, that means that you understand the price action technical analysis that you can learn in my first ebook below on the description of this video. If you don't want to learn, there is also some jobs here for you to marketing that ebook. Okay, and if you just not have a skill yet, then you should find a specific candlestick that you understand, and then you see the evidence for the continuation or not. That is my tips. For example, find the hammer candlestick like this. Okay, because the default of the hammer is going up. Okay, and that means you find here in 5 minutes, and then you see here a retracement, most probably will 2 candlestick, and the 4 and the 5 will be going up, but also in between, because the combination, they can do a breakout first, retracement in the next, they can do retracement first and the continuation in the middle. You see, it's a probability. So if you find like this, your rule will be default, so you don't again your rules like this is will be the first a level that the price is touched. For example, this is 5 minutes, 1 minute here, second minutes will be a doji probability, you careful with that, and the third, if this doji was like that, like inverted bullish hammer, and you find 20 EMA is below you, 50, and then that means a trend, and you can do in the tree a buying pressure here for a call option and a call option in the next with the safe entry point here. So that is the scenario. You have to find a scenario and the default strategy, so you don't break your rules, because if you don't have a rule in this kind of context, you will be anywhere. Okay, don't know what is the market is. So you can read those on my ebook. Thank you and bye bye.